Hi guys, this is Teacher Party. Like, subscribe, hit the notification bell. Okay, so that we can learn accounting. Remember, accounting is very doable, is very easy to understand when you are consistent and you understand the principles better. Then it just informs the whole process. So, guys, we're still continuing with the conceptual framework, and we're looking at the characteristics of the financial reports as prescribed by IFRS and IASB, International Accounting Standard Boards, IFRS International Financial Reporting Standards. Okay, guys. So in order for the financial statements to be good, or to financial reports to meet quality, there has been a prescribed tick box by IFRS. So they say they should be relevant and they must be faithful representation. And then they've continued to enhance these. The financial statements must be comparability, they must be verifiable, timeliness, and they must be understandable. Ne? So guys, let's look at relevance. Ne? So I like doing show and tell so that you can grasp the concept. Ne? So assume you're applying to UCT. You're applying for a course. That course is, did I delete that? That course is use, let me see, use. Let's assume you're applying for a course, yes, in accounting. And UCT starts telling you stories, guys, they start telling you that we want you to give us an NSC, the National Senior Certificate, for you to apply for a course with us. And this is what we want from that National Senior Certificate. Basically, you should be a distinctions child. You should be a level 7 child. We're not taking anyone below level 7. We just want you to be level 7. And then we all sing Kumbaya and we accept you. Hey, guys. All right. Ne? And when now what you do, because you're like, you know what, you can't do that to me. I want to attend UCT, but I'll use my own understanding mean. Then you give them a grade 3 report. You don't give them this report, which is the National Senior Certificate. When you give them grade 3 report, is that report relevant for your admission to a degree? No, you've given information that is old by at least 9 or 8 years. So this is what relevance is about, ladies and gentlemen. Once financial statements are presented very old, they are no longer relevant. The information in those set of financials, it's not going to be used for decision making anymore. The shareholders, the investors, the creditors, the compliance officers, in terms of like SARS and all, they're not going to find that information useful for anything. It's as good as being thrown into the bin. So relevance speaks to information must be capable of making a difference in the decisions made by the users. That's the information in the financial records. If it's not doing that, then it's really not that relevant. And the relevance is influenced by materiality. Some cases, information is omitted, is misstated, or obscured. So for it to influence the decisions of decision makers. So information must stay relevant. It can't be used to obscure, to misstate, and all that. If when we're talking about relevance and information not having material misstatement, guys, we live in South Africa. I'm trying to go back to my stuff now. We're living in South Africa, and we had something that shook the world in South Africa, with Steinhoff. So what happened 5 years ago? The CEO resigned, and when he resigned, he was accused of fraud for falsely claiming to trade know-how in an allegedly bogus deal in 2010. The deal boosted the revenues of German Steinhoff subsidiary by 95 million euros, roughly 1 billion rands at the time. So these figures, they were just affecting the balance sheet. So it is alleged that, or maybe it's at an established level now, it's just that someone needs to go to jail, that the financial statements were inflated, the balance sheet was inflated with almost 1 billion, which was relevant for decision making. The information, the size of the transaction was so big that it made relevance in terms of financial reporting. So with relevance, we're looking at, is the information capable of affecting the decision of the users? If it was reported or not reported, how much damage would be done by that omission? Okay, so now we look into faithful representation. Guys, there's no use of preparing financial records if they are not coming from an honest perspective. So financial reports, when we're talking about the economic phenomena, we're talking about we're talking about the money, we're talking about the currency aspect. So, and also the words, né? So for the financial reports to be perfectly faithful, they must be complete, neutral, and free from error. We read Steinhoff, there was error. There was error there. And completion speaks to, you can't leave out transactions and say, instead of me, so I'm going to go do the right thing, I'm not going to report this because it's going to put me in trouble. You report everything. Financial report must be complete. It's not your money, it's the shareholders' money. There must be full disclosure and neutral. So it must not be done like you're looking at the balance sheet deal that was included to increase profits. It was to save the boss from the Steinhoff boss from being axed. I mean, shareholders want growth. So the information was not neutral at all. It was produced to make the CEO of Steinhoff look like, you know what, you got this, my guy, you're a great leader and all that. And it failed to serve the needs of the shareholders, which is the information being free from error. Okay? So I hope you understand what I'm talking about when I'm talking about faithful representation. So we're continuing touching on comparability. So comparability, guys, I like using Mr. Price. And then I'm going to come back to explain this. Ne? Mr. Price is selling clothes. Ne? He's selling clothes, kitchenware, is selling clothes, is selling clothes, is selling kitchenware, is selling sportswear. Woolworths does almost similar things, and they are trading in similar environments. So it's highly likely that shareholders, when they get their finalized financial statements, they're going to compare the performance of Mr. Price to Woolworths, and they're going to see, is it much better is it not better if I just pull my funds there and invest in Woolworths? Or if Mr. Price did not perform because of the tough economic conditions that are affecting, sorry about that, that are affecting the clothing industry. So maybe the board is going to use that as as a scapegoat that you must be mindful that you are working in South Africa. It's tough economic conditions. There's nothing much we could do. This is already affecting the whole clothing industry. Shareholders are smart. They want their money back, brothers. They'll be like, okay, let's go and check how did Woolworths perform. Surprise, surprise, Woolworths performed very well. And then they're like, okay, so clearly you're using that as a scapegoat. Or they might say that, in fact, Woolworths had the similar performance. There was drops in earnings. The Edcon group faced the same crisis and all that. So comparability speaks to that. For users of financial statements, they're not going to read them in isolation. They will apply context. External factors will be applied. And comparability also speaks to using different years, using 2 years when reporting, when presenting financial reports. You see, this is a consolidated statement of financial position. So here, it's showing you 2021. So I could only find 2021 in the internet for Mr. Price. And also here is showing you 2020. So we can compare current year performance to prior year performance. That's what financial reports are to be able to do. Otherwise, how do you know where you're going as an organization? Is your revenue increasing? Is it decreasing? Are your expenses increasing? In comparison to what? To industry or internally? So the moment that information is not comparable to anything, guys, it's not meeting the good quality characteristics, ne? Okay. So it says, consequently, information, that's what IFRS dictates. Consequently, information about a reporting entity is more useful if it can be compared with similar information about other entities and with similar information about the same entity for another period or another date. A comparison requires at least 2 items. It can be the 2 industries, Woolworths and Mr. Price. It can be Mr. Price comparing their results with this year, comparing it to the prior year. So you get the gist. There must be something you are using as a benchmark. It can't be that your company is all in all. Okay, so verifiability. So guys, this speaks to just want to say something. Okay, sorry about that. So guys, verifiability. This speaks to information being checked, financial records being checked by an independent party. That independent party that independent party, guys, is the auditors. Okay. Let me just see. So the auditors will write their findings, their risk areas, what they saw and what they are recommending, and they will conclude saying that there is no error they've found or misstatements they've found in the financial reports. So before you get the financial statements, just that I don't know how I got it. Yes. So it says here, there's been no material changes in financial and trade position of the company in the group of the date, the signature of the audit report and the notice. So it will give something clear. it will give something clear that after the auditors did the work, the external auditors did their work in verifying the financial records, they are happy that they could not find any errors in the financial report, so they can give reasonable assurance. So that makes shareholders at ease, guys, that someone independent, someone off the cloth, someone not working for the company has actually came in to look at the financial records and they are satisfied with them. It gives the shareholders confidence, guys. No, so it helps verifiability helps assure users that information faithfully represents the economic phenomenon it purports to represent. So it means also different knowledgeable and independent observers could reach consensus, although not necessarily complete agreement, that a particular depiction is a faithful representation. We say external auditors can't give 100% assurance, but they can give reasonable assurance that these financial records, they're above water. Timeliness, guys. You can't prepare 2018 financial statements and only give those in 2023 to the board of directors. To do what with them? It's like that grade 3 report. What must UCT do with that report? The most recent, the better, because business decisions are made in real time. They're not made in historic time. They're made in real time. So financial reports must be produced timelessly. You see here, you see, Woolworths, if you go to their website where they have financial statements loaded, financial reports loaded, your guys, like it's 2023 now, they have loaded 2022 final integrated report. Mr. Price, I don't know where they loaded the other one. I could only find preliminary results for 2023 and 2022. But 2021 they had the integrated report included. So guys, it's 2023 now. Maybe I think the AGM said so. They have the final set of financial statements. It's a matter of them being loaded in the website. They've not been loaded yet. But if it's the financial year end if the financial year end is December, by March, in the first meeting, the financial statements should be ready, and the auditors must present to the board, and the board must sign the financials. It can't be done in June. That's too late. It's already half year. At that time in June, if the financial year end is December, preliminary results interim results should be produced. So yeah, we keep it moving. Understandability. So classifying, characterizing, and presenting information clearly and concisely makes it understandable. Guys, this speaks to the language. Imagine you're producing financial statements, you're producing financial statements in Mandarin and you're going to present them in South Africa to a board that is mixed of South African races, not even one Chinese person. Who's going to understand that? No one is going to understand that. But also, I'm just making an easy to remember example for you guys because you're still doing first year. And I said accounting in university is taught as if you've already practiced, and it's not that way. It's actually the opposite. If you're looking at these people, a company does not promote CAs only to be directors or to be head of divisions and all that, CEOs of divisions. It's not, many of them will be CA, but not all of them are CAs. You'll find that the head of the food division, this is a qualified nutritionist. They did not study accounting. So when you use jargon that they can't understand, when you use a rounding off figures that they can't understand, then you've made it difficult for them to use the information to make decisions because they can't comprehend it. You look at the people sitting in social ethics committee. Most of those people, they studied Bachelor of Arts, they did gender justice, what justice. They do not know financial statements. So the easier you make it for them as an accountant, the better. So that had to be noted then, that the information must be characterized and presented in information that is clear and concise. You can't overwrite, you can't overpresent. These people don't know what you're talking about, and they don't have the time in the world to be sitting and listening to what you are trying to say, but failing to project. Okay? Look at this. This is Woolworths. Ne? So if you see here, this is clarity and classification on the left. They'll be giving the names, what turnover, cost of sales, the words that we use every day, expenses, stock costs, profit, and then they'll be doing the comparatives of prior, current year, and the percentage change, just to help the users of financial statements to see when you're already seeing a 1.7 percent increase. It already talks to there was profit. Woolworths worked harder in 2022. They had 78 billion in 2021. Now they've got 80 billion in 2022, and they're saying it's 1.7 increase in the revenue. It's already making it easier even for someone who never did accounting. But now if you put the technicalities on how you calculate turnover, what it was adjusted to, it's the gibberish they don't want to hear. They just want to know, did we make money or not? So financial reports must be able to reach the user's need and user's sense of understanding and vocab. So if it fails to meet that, even though it's dictated upon us what to write, you can't change PPE to be something else, but it must be clear, concise, and maybe also provide in the notes what makes up PPE so that it's easier for the reader to follow. So guys, I hope you understand. This is Teacher Party. Thank you. Bye.